Did you hear that Amazon stock took its hardest hit when the market closed on Friday? Well, if you want to know why and what caused it to happen and how that may impact you as an investor in Amazon, well, let me break the news to you. Come on into the room. Let's go.
The Debt Demolisher TV with Sophia Melone.
Hi, everyone. It's Sophia Melone, the Debt Demolisher, here to bring you the tools, tips, and tricks to help you manage your financial baggage the right way. In today's episode, we're going to be talking about Amazon and how their stock price took its hardest hit in the longest time after not only the tech frenzy, but also some things that have been happening with them having their most unprofitable year in the last 8 years. Yes, Amazon has been a company that many of us has used, especially within these pandemic times and even pre the pandemic, because of the ease of shopping, because of the ease of getting anything and finding everything that we need on Amazon, and even getting our groceries from their partner with Whole Food and Fresh. Well, believe it or not, guys, despite all of the consumer spending that you, me, and so many others might have been spending with Amazon over these years, according to Amazon's financials, they lost $2.7 billion in 2022 alone. Now, when these financial reportings were discussed and shared during Amazon's most recent investor call, of course, you know the inevitable happened. Their stock prices fell drastically. When you think about the history of Amazon stock prices, I remember a point in time where Amazon stock was about $2,000, $3,000. But not long ago, they did a stock split, which allowed their share prices to go down drastically to allow more to be able to purchase the stock. So when their stock price fell on Friday, that created a lot of concern amongst investors in the market. Why? Because Amazon's portfolio and their company is a very strong company. We know that Amazon is a company that has been around since 1994. And they are a multifaceted technology services company that specializes, of course, in retail shopping and shipping. Now, you may be wondering, Sophia, I know that I shop at Amazon. I know so many others that shop at Amazon. And I know even though they're reporting this unprofitable year, how did they lose $2.7 billion? Well, number one, Amazon held a 20% stake in an electronic automaking company that unfortunately ended up plummeting in value at the ending of 2022. And with the loss of the value in that company, it caused Amazon's bottom line to take a huge hit. 20% is a lot of money and a lot of value that will most definitely impact the liquidity and the profitability of a company. Another reason why Amazon took a $2.7 billion loss last year is because they expanded their warehouse plans. We all know that Amazon does a lot in terms of retail shipping, and so they have warehouses across the globe. And with these warehouses across the globe, and there's plans for expansion to be able to house these items that they're selling, because the economy is turning around just a little bit in terms of people not spending as much, people spending more of their resources on traveling, people going out instead of having more things delivered to them, the cost of a warehouse is a lot more than what they're seeing in returns when they're trying to turn around these items that are being sold. So with warehouse expansion plans that's costing millions and billions of dollars, and the return on that investment is not coming back in that same speed, of course, when we're looking at the financials within a given window, you're going to see some declines if the revenue isn't coming in that same regard. So what Amazon is focusing on doing right now is cutting expenses. And this takes me back to a lot of the lessons that I share right here on the Debt Demolisher TV when we talk about how to adjust when we are in a space where our resources may not be sufficient for the season in which we are in. So Amazon's priority right now is to cut costs in its operations, and their most costly expense more than likely is employees, because they have so many people on the ground, they have so many people in the warehouses, they have so many even corporate level employees. They are planning to cut at least 18,000 corporate jobs in Amazon. Ooh. That is a lot of jobs. And we have to look at it from this perspective as well, that Amazon is the second largest private employer in the world. And so if the second largest private employer is eliminating 18,000 jobs. Can you only imagine what that is going to do for those who are in those positions and what that's going to do when it comes to the cost savings that they're going to have by not having to pay payroll taxes for those people, not having to pay wages for those people, not having to pay benefits for those people. It is a huge cost saver for the company, but it's certainly not going to be a good thing for the employee who's going to receive that pink slip. In this season of inflation and in this season of interest rates rising and in the season of everyday living expenses that we have to pay for and that we have to incur, it's going up and up and up and up and up, but our income is not going up in commensurate to that same level. It is going to be a challenge. And not only is it going to be a challenge, you also have to look at it from the employer's perspective too, as well as your own. In these seasons of high cost and low income, it is wise to scale back. It is wise to reduce your spending. You have to cut. It goes back to the CAT plan that I talked about on this channel. The very first thing is cut. You have to eliminate the expenses, and it can be challenging, especially if you've had good intentions and you want to be able to provide jobs. You want to be able to give people benefits, but where's the sustainability? Where's the sustainability if there is no proper inflow coming in? So we have to understand in these seasons and these times and in this realm of business that it is a part of the process. You as a business owner, you as an employer, you as an employee, you have to understand that there are decisions that are made on all aspects, and you have the autonomy to make your own decisions while your employer has their autonomy to make their own decisions. And then you as the consumer, you as the business owner, you as the person who holds the strings of the purse or the wallet for that matter, you have that autonomy to make whatever decisions you need to make around your financial resources so that they can work for the betterment of you. So even though you may be impacted, someone you know may be impacted, we have to understand that in these seasons of business, it's all about strategic decision making, and sometimes things have to get eliminated. And sometimes that thing that has to be eliminated may be something that may be personal to you, but sometimes that option is almost inevitable. But here's the interesting thing about Amazon, because they're planning to cut employees' salaries. They're planning to cut jobs by 18,000 positions. However, they still have plans to do more acquisition. So they're in the works on closing a $4 billion deal to purchase a chain of primary care clinics. Now, my curiosity mind is starting to spin, right? Because we know that Amazon went into the grocery business where they acquired Whole Food and they acquired Fresh, and they allowed the option and the ability for food to be delivered through our homes through Amazon. But I don't know if you guys heard the recent release of them planning to close at least 50 of its retail stores, leaving only a dozen open. But now they're planning to purchase primary care clinics. Now, when we think about primary care clinics, that's in the health industry. And when we think about the health industry, what is the most prominent thing inside of the health industry? Pharmaceuticals. So does this mean that Amazon may be getting into the business of shipping and sending and retailing prescriptions through primary clinics? We don't know, but that's something to think about, and it's something to really put on our radars and really analyze how these companies are conducting business, how they are moving along with trends of maybe what's next. We didn't know that the pandemic was going to happen, but when it happened, Amazon made a decision to say, boom, we're going to go into the business of acquiring grocery stores so that way we can get people to get their deliveries at home. They don't have to worry about going into the supermarket, fighting over toilet paper and fighting over toiletries and fighting over food when they can have food delivered straight to their homes. And now they're moving into the industry of pharmaceuticals. So what does that mean? What does that mean? And what does that mean for investors? Before I go into the conversation around what that means for investors, I do want to share that Any and everything that I share inside of this video is for informational purposes only. It is not for the purposes of giving any type of financial investment advice. So please, by no means am I telling you to purchase any type of stock. By any means am I telling you to sell any kind of stock. By any means am I telling you anything financially related. It's just for you to be able to think about so that you can make your decision by vetting what you're hearing and doing your due diligence before you make any decisions. So now that we have that out the way, I want to share my perspective in terms of what I think could be a great outcome. We see that Amazon stock price lowered. Check one. We see the fact that although they sustained a $2.7 billion loss last year, they're still in the process of acquiring a different business chain that could produce more revenues and profits for the business. So what that means is whenever you're in a situation and you're looking at stocks and you're looking at when to invest in companies, you want to look at what they're doing and how their history lies. We all know that Amazon is an exceptional company, right? We know that it's a very popular company, and we know that they are focused on innovation. They're focused on the future. They're focused on the next best thing. One thing that I've always learned in the finance space is that you buy low and you sell high. So when stock prices are low, that's when you want to grab your shares. But when stock prices are high, that's when you can play and tangle with if you want to sell them or not, because you're going to be able to get a greater return on your initial investment, assuming, of course, that you purchase your shares at much less than the current price that it's selling for. Although Amazon's stock price closed on Friday at $102.95 per share, there could be a possibility that it may go up a little bit more on Monday. It could be a possibility that it could go down some more in the weeks to come. Or will it go up because of this new acquisition? We'll just have to pay attention to find out. So you guys, I'm going to leave some references down in the DDTV toolbox. So I want you to go down to the description box as well as the pinned comments, expand that section so that way you can check out the links and read the articles for yourself and get a little bit more insight on what happened and why. Remember to do your due diligence on anything that's pertaining to investing, because the information that I am sharing here is not investment advice. It's just something to help get your mind thinking and to bring things to your awareness. If you didn't like on the way in, make sure that you like on the way out, and also subscribe to the DDTV channel because we have more juice and gems that'll be coming right here, and I hope to see you back. Remember, your financial prosperity awaits you, and so does your financial sanity. You already know what I'm going to tell you to do, and that's what? Get to work. All right, guys. Bye. This thing ain't about to be no 10 minutes, child, but this is crazy.
The Debt Demolisher TV with Sophia Melone. The Debt Demolisher TV with Sophia Melone. The Debt Demolisher TV with Sophia